Hello, I'm Annabel Brodie-Smith, Communications Director of the Association of Investment Companies. To celebrate 150 years of investment companies, today for the first time on a panel interview, we are focusing on the role and impact of investment company boards. Boards are one of investment companies' most important benefits. They offer additional oversight for investors and have a legal responsibility to protect investors' interests. And in recent years, boards have been particularly active in negotiating lower fees for investors, with over a third of investment companies reducing fees since 2013. I'm delighted to be joined today by three investment company board directors: Clare Dobie, Director of Allianz Trust, Robert Jeens, Chairman of Allianz Technology, and Gay Collins, Director at JPMorgan Global Growth Income. On to the questions. Clare, please explain your role as an investment company director.
Well, there are lots of formal roles. We decide on the dividend, we approve the report and accounts, we set gearing policy and so on and so on. But actually I think the most important thing is to sit back and think about what would make this trust more successful for shareholders. And that could be a whole range of things, from fee reductions you referred to, changing the manager, changing the mandate, all sorts of things that exist as options.
I'm sure shareholders would agree with you on that. Robert, can you explain your role as a director?
I could only add to what Claire said. I think it's really important that you are there for the shareholders and the shareholders know that. And you have to work on that. And quite often a lot of that is actually doing to encouraging the manager. So you want to really support the manager and to produce a really good job. You also need to recognise where the conflicts lie though. The fees, buybacks, share issuance, this is territory where the manager and the shareholders may not have exactly the same interests. And boards need to concentrate on those particular points.
Absolutely. Gay?
Yeah, I see the board working very closely together to make sure that we're using the various talents and insight that we might have to help to achieve greater value for the shareholders overall. And that can be represented in lots of different ways. Often it's the way that we're working with the fund manager, trying to encourage him, trying to get him to or her to perform in the best possible way. It's working with the company secretary, the client services director, the marketing people, the PR people, so that together we are all achieving the best outcome for the trust that we're on the board of.
Yeah, all working together.
Yeah.
So what experience do you bring to the board, Gay?
Well, I come from a PR background and I've worked with investment trusts, but advising them in terms of how they communicate and how they work with generally the media, but also with analysts. So I guess what I bring to the board is thinking about that trusts are sold, not bought. And after RDR came in, we are much more on a level playing field with unit trusts, where unit trusts tend to have teams of salespeople, marketing people, PR people who have sort of honed the message and got out there and delivered it. And investment trusts have not always had that kind of support. So I see my role as well as the sort of broader contribution to the board oversight and board governance as really making sure that the trust that I work with is making the best of its aspects.
Yeah, I think it's really important that that message gets across what you're actually doing as a company. Robert, Allianz Technology, specialist technology company, what experience do you bring to the board?
This century, I've done nothing but non-executive work, so actually I'm a governance specialist. I've got a background in the city. I've worked as finance director of large companies in the last century, and I've also more recently been chairman and non-executive director of a variety of technology companies. So I sort of span the technology and sort of city and governance themes, and it's a privilege to serve on all these boards, but actually you do learn from one and you take it to the other, and I think I've contributed in that way.
Well, that's a very long time. I'm sure it's a lot of experience. Clare, obviously Allianz Trust, big global company. What experience do you bring to that investment company?
I've got a journalist and marketing background, marketing in the asset management industry. And I also sit on 4 investment trusts altogether. I know we're talking a bit about Allianz Trust today, but I have experience from elsewhere. And I've been a non-exec in the NHS, which was very different.
Well, that is quite an experience. So, moving on to your individual work, Clare, could you explain why the Allianz Trust board implemented a new strategy and a new management recently?
Yes, shareholders told us they wanted change. They made that pretty clear, unambiguous, and performance was pretty stodgy, and we had an activist investor circling. So one way or another we got the message. We undertook a strategic review, and we looked at all the investment options with a view to finding out which one would be best for shareholders. We looked at single managers, and we looked at star managers, and we looked at the standard multi-manager structure. What we opted for was something different. It's an alliance of 8 high conviction managers. It has the benefit of low volatility, which comes from the 8 managers, and the benefit of the performance kicker that the high conviction brings. So we appointed Willis Towers Watson as our manager to oversee this, and we sold our investment subsidiary Allianz Trust investments to Lion Trust.
And most importantly, what has been the outcome for shareholders?
Well, we set the investment manager, Willis Towers Watson, a demanding performance target, 2% outperformance over rolling 3 years crucially, after costs. And they look to be on target to beat that. It's outperformed, the equity portfolio is outperformed by 1.7% so far since they were appointed. And the discount for shareholders, the discount of the share price to the net asset value, has come in from high teens, which it once reached, to about 6%.
So quite a big change, actually.
Quite a big change. Yeah.
Wow, that's very interesting. Robert, as chairman of Allianz Technology, a sector that's very much in demand recently, could you explain the board's role in managing the discount and the premium?
It's a critical question. I think it's a critical question for all trusts, but more so for a specialist trust such as a technology one, where actually demand goes up and down in a much more volatile fashion than for a trust generally. I think the board's role is to look after the shareholders' interests, and it's quite complex in that respect because, for example, buying back shares is not something a manager will usually want to do, therefore, because obviously they would lose income if they do that, but it may be exactly the right thing to do for shareholders if the discount's appropriate and market conditions are appropriate, and we monitor that very closely. More importantly though, we've worked on making sure there is as much demand for our shares as possible, and that's involved investing in marketing and communications, recognising that unless the manager who's based in California comes over and pounds the streets of Britain, they won't attract the attention that they deserve because their performance has been absolutely fantastic. But if you're going to narrow your discount and put it to a premium, as we've now seen with Allianz Technology Trust, you need the combination of that great performance, great communications, and obviously a conducive environment for demand for technology shares. And we've worked very hard at that. We've most recently we've issued a lot of shares, and we've had to go back to shareholders to get extra authorities to do that. So we had a special shareholder meeting. We've published a circular to enable us to issue more shares, and we've been a regular issue of shares, such that in the last 2 or 3 years, the value of the trust has gone from below £200 million to over £500 million.
Great to see so much demand for the company. Really good. And how has the board approached setting fees at Allianz Technology, and how have shareholders benefited from that?
In my time on the board, we've had, I might describe as 2 goes at fees, because I think it's a continuing responsibility of the board to look at all costs, but the fees are the most visible one of those. And when I arrived on the board, the manager just had an incredibly good year. They're about to be paid a very large performance fee, but it was clear to the board that the basis of that performance fee wasn't actually as well framed as it should be. Most importantly, the manager didn't have to make up for underperformance before another fee could be payable. So we renegotiated that fee at a lower level and made sure that the manager, to the extent they did underperform, had to catch up all underperformance before a fee was payable. And it took 4 years before that got back into positive territory. We paid a small performance fee last year, and I think we'll pay a very large one this year based on fantastic performance. But the board has made sure that that fee absolutely works to the benefit of shareholders. We've also, in the past year, rebased the management fee with a tiered scale. So at the end of last year, when the trust was worth, perhaps 340 million or something, we agreed with the manager that to the extent the trust's market value is over 400 million, the base management fee would drop from 80 to 60 basis points. And the great news this year is that we've now got this over 500 million market cap, and the shareholders are benefiting from that every time new shares are issued, and it's a continuing benefit. Very pleased with that.
I'm sure they're very pleased with shareholders, and we have seen boards being incredibly proactive in terms of setting fees and reducing fees on the behalf of shareholders. So very good to hear that example. Gay, please can you explain why the board implemented a new dividend strategy at JPMorgan Global Growth and Income?
Yes, well, when I joined the board, we were subscale, under 200 million market cap. We were trading at quite a significant discount, around between 14 and 16%, and we were buying back shares. So we were essentially getting smaller, and we just were not in the kind of appealing side of the investment trust world. So we worked with the board, the chairman in particular drove this idea with our brokers and with JPMorgan, the broader team there, to work out what could we do to really grow the trust. And we decided that we would essentially separate out the investment policy from the distribution policy. And we kept the same investment manager process, but what we decided to do was to increase the distribution so that we became an income investment trust rather than a growth investment trust. So essentially we started delivering total return rather than capital growth. That meant that we moved sectors, so we changed from being in the global growth sector to being the global equity income sector. We changed names, so we went from JPMorgan Overseas to JPMorgan Global Growth and Income. We completely rethought what is our offering to the market. Why should people buy our trust rather than any other income trust? Because we could see that everyone was had the appeal of an income trust, but why should they buy ours rather than others? So we thought very much about what is our kind of messaging, what do we need to get out there? And once we agreed that, we got out there and we went on roadshows, we did digital marketing campaigns, advertising campaigns, PR, and that really made a difference to our shareholder base.
I'm going to say, what impact has it had for your shareholders, this change?
Well, multiple impact. So first of all, from the discount of around 15.5% at that time, we are now trading at a premium. We went to a relatively attractive premium. We're now just on a premium. And that has a lot of benefits to an investment trust because it means that we can start issuing shares rather than buying them back. So we're growing in that way. But I think the thing that we were most excited about is that we had a lot of marginal shareholders before we did this who were really there in order to try and ride out the discount. They weren't really invested in JPMorgan Overseas as it was then for the sort of long-term investment prospects. They were just trying to ride out, a short term. So they were a bit like a hedge fund, although they weren't all hedge funds. And this change meant that we were much more appealing to the wealth managers whose clients tend to be there for a much longer term time period, who are buying a trust for a part it might play in a broader portfolio, and who are very definitely kind of long-term supportive shareholders. So that to us was I think the most exciting rationale and result from this, and we're really pleased with our shareholder base, although we can see it developing more and we need to get out there and continue to tell the story.
Yes, and a huge impact on that discount, bringing it to a premium.
Yeah.
I'm sure your shareholders,
lots of
thank you for that.
happy.
Yes. So finally, Robert, please can you tell us more about your best experience as a board director?
I've been doing board work for a long time, as you know. It's just 20 years as non-executive work, and I've had lots of highs and lots of lows, and there's been lots of interesting things. But probably this recent phase with Allianz Technology Trust, where actually the stars have come together. So strong investment performance over a period of years, great marketing, great work by the Allianz Global Investors sort of marketing team, really sort of outside advisors as well, just people working together successfully. Our share registers changed in much the same way Gay's described. I think our retail base is now right up in the 80s sort of thing, which is fantastic. And of course technology is so much in fashion. So actually growing the trust that rapidly has left lots of happy faces. Now I can't promise it'll go on forever, but at the moment actually we the board are basking in reflected glory because everyone out there has done a really fantastic job.
Yeah, it really has come together all at the same time for you, hasn't it? Gay, what's your best experience as a board director?
I mean, there's been lots in the last 6 years. I mean, it's a privileged position to be in. It makes you think, it makes you, work together well as a team, and you come across some fascinating and incredibly bright people. But I think what really stands out is that at a recent seminar that JPMorgan had, we were described as the poster child of the investment trust industry because of what we had done in terms of changing the focus of the trust. And that is a really exciting thing, because you sometimes make these decisions and you don't know whether they're going to work out, and you don't know whether the stars are going to be aligned in the right way. And sometimes it's easier to sit and do nothing and just tinker around the edges rather than actually do something that's quite a big change.
Oh, I mean, it's a very bold move you've made, and it's great to hear how well it's worked out.
Yeah, so that was definitely the high, but I'm sure there'll be more in the future.
And Claire, what's your best experience as a board director?
I'll tell a personal story.
Sure.
My first AGM at Allianz Trust. Big event, lots of people come to the Allianz Trust AGMs. And I met a woman who had inherited her shares from her parents. Her father had inherited from his grandfather. It rather made me think that our tagline, investing for generations, is not merely a bit of marketing propaganda, it's what we do. It's quite awe-inspiring.
It is. To have those shares being passed down with it from family to family, isn't that incredible? Wow, what an experience. Well, I'd very much like to thank our directors for joining us today. It's great to hear their views on the role and impact of investment company boards. I'd like to emphasise that we don't know what's going to happen in the future. Investment is for the long term, and you need to have a well-balanced portfolio. If you're in any doubt, you should talk to a financial advisor. Thanks so much for watching.